Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Friday, the 20th of June, TGI. The TGI, thank God it's Friday, 20th of June, Bull versus Bear webinar. Steve Miley here on the Call for Trader. TGI Friday, everyone. First of all, an apology for the issues that have been suffered in here from the middle part of this week due to an attack on the Trade Day site, which we managed to thwart. But all good now and has been good for a while. Obviously, password resets imposed just for a safety measure from trade day. So, all good in here. So, sorry. Here's an incoming call. I should have put us on mute. So, we are, so we're going to take a look at our usual run through in here today. We're going to take a look at the markets. We're going to take a look at the calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires and what's going on the geopolitical central bank data-driven events that are shaping markets right now, and a quick look at the charts and what's going on at the moment. Another thing, just as an announcement in here, equity futures, you shouldn't be trading the June contract anyway, but if you are, you should definitely be running to the June if you're trading the equity indices, the S&P, the NASDAQ, the Dow, the Russell 2000, etc. If you're trading the equity indices, you should now be trading on the September, which is the U contract, ESU, NQU, etc. So please make sure you're also, those expire today. So if you see that you cannot trade any longer, it's because we have expiry today of the June contract. Looking at the data in here going into today, very, very light on the US front. We've had some UK data in here. You see worse than expected retail sales data. Do get Canadian retail sales later this afternoon. Philly Fed data, sometimes manufacturing index data, sometimes moves markets, rarely significantly, particularly with the geopolitical backdrop we have at the moment. That is just in just 1 hour, from the US. So just under 1 hour, we get the US Philly Fed data, but usually not necessarily a particularly big mover of the market. Running through the major news wires in here, Bloomberg, Reuters. We'll start off with the morning briefing America from Bloomberg. So futures waver as Trump hints at diplomacy on Iran. So Trump came out and said holding back on any kind of strikes or making a decision in the next 2 weeks. Going to try and give diplomacy a chance. Oil prices came back lower. Stock futures higher. European equity markets are higher today, and the dollar slightly lower. Tension still running high in here, though. We had Israel target missile production sites and Iran's nuclear headquarters overnight. President said the only way to end the war is to unconditionally stop Israel. So tensions remain high. But looking for developments. Also keeping an eye on tariffs as well, on the potential imposition of tariffs and the trade negotiations and trade war that we have going on at the moment. So US futures wavering as Trump weighs role in Iran. Trump hints he'll hold off Iran shot, give diplomacy time to cool down is what Reuters is going for in their take 5 in here. Morning bid from Reuters, relief at 2-week Middle East window potentially. Oil tumbles lower, stocks rebound after that. European stocks up on it, and we've discussed all that already. The Nikkei was actually slightly lower, 0.2, but the Hang Seng jumped 1.25% this morning. European bourses are higher across the board in here. The UK FTSE up 0.5%. German DAX nearly 1% higher, and the French CAC 0.2% up. And US futures higher in here. Oh, they were higher. Actually dipping back lower in here now, unless that's. Why is that not up here? I thought these were slightly higher. Well, we're pretty much flat in here, but they were slightly higher earlier on today, dipping back lower in here, though. On the just quick run through the interest rate markets, because we haven't really looked at these since we had the Fed in the middle of the week in here. So still pretty much little chance, only a 10% chance we get a rate cut in July. Looking for that rate cut to most likely to come in here now in September, but like a 37% chance that we still don't have a rate cut come September now. So a slight fade in chances after the Fed meeting, and a fairly relatively not downbeat, but on a relatively still hawkish and far from dovish tone from the Fed back on Wednesday from Powell. So still now 30. So this has actually gone slightly higher. 37% chance was still unchanged in September. By October, though, we are looking for a rate cut. Only 18% chance we're unchanged. By the end of the year, still the most likely we've had two rate cuts by the end of the year, but there's 33% chance we have 1 or 0 rate cuts by the end of the year. So the market kind of sort of wavering back towards maybe 1 to 2 rate cuts, most likely 2 rate cuts by year end, and maybe the first rate cut now not coming to the October meeting, September-October meeting for the first rate cut. Yields, however, kind of stay in this kind of holding pattern, very much oscillating in here, back slightly to higher yields overnight. And if we look at our outlook, though, on the bond side, still looking for these like succession of higher highs and higher lows, particularly at the long end, to be looking to higher prices, lower yields. And there's similar like basing patterns and bullish reversals. So our outlook right the way across the yield curve, you see in here on the 5, you're actually playing with this down trend line. So starting to look a little bit more bullish. So that's bullish on price. Remember, lower yields, which should be supportive of stocks. But stocks, as you know, were lower yesterday, did a rollover, but they have rebounded overnight. We're clinging to, I mean, we did undercut some recent lows from the last couple of weeks of sideways trading. We did undercut those on both the S&P and the Nasdaq in here. So market is potentially rolling over slightly, but we're clinging on to a bullishness, particularly now with the rebound that we've seen overnight. Not quite sure why we're showing lower overnight. Seems higher in here, but certainly looking for market. Maybe do they have it on the, just going back to that in here, they may be on the, so what they got in the ESC, they may have it on the, oh yeah, they got it on the June expiration. This is why, it's because they're on the June. They should have rolled to the September. It's because they're on the June contract. We're here on the September contract. You see we are rebounding. We're notably up overnight. That's why that's incorrect. So we did close yesterday for the first time. You say, since all the way back here, below this 13-period EMA. This 13-period EMA has been really positive and holding, and the market dipping below and rebounding above. And we were significantly below that closing yesterday, and also closing below this kind of lows in here. If we go to the 30-minute, this is on the NQ, undercutting these lows, these 1, 2, 3 lows in here, creating a potential topping. But we did only just undercut them. I mean, just undercut them. And then in late trading yesterday afternoon, and then the market actually were closed yesterday. This was back on after we reopened. No, this was just before we closed. So just before we closed yesterday in here. So yesterday morning, just before we closed it in the market, just undercut, and then we've rebounded back higher overnight. So it's only a brief undercut there. And similarly here on the ES on the daily, undercutting and closing significantly below, and also undercutting these lows here, which we'll see on the 30-minute in here, undercutting these lows here. But again, it was just before the market closed on that Juneteenth sort of partial day in here that we had just the morning trading. And then the market has subsequently rebounded and then rebounded back to that 13-period EMA on both the ES and the NQ in here on the dailies. So that 13-day EMA. So market's kind of trepidant, signaling potentially yesterday, but it was effectively a holiday yesterday. Obviously, the cash market was closed and the market's come right back. So the cash market closed, maybe taking yesterday's price action. I'm not saying you negate it. We never ignore price action, okay? But remember that price action on the markets yesterday was the cash market close, and now the cash markets are back up again in here. Going to be opening up back kind of close to where we were and closed out back on Wednesday, with the cash market closed on Thursday. So the cash market is little changed Wednesday through Friday, where these futures obviously went down below and then back higher in here. So I think, you don't negate that price action, but equally it's not as important with the cash market close. So the market has rebounded, and if we can close back above that 13-period EMA today, it's looking positive. So I'm carrying a kind of a positive outlook going into today, particularly after Trump, pretty much indicating that there's a 2-week window now. We're not imminently going to be strikes on Iran. All right, guys, I'm going to wrap it up there. Remember, as much as it's probably not going to be really impactful, watching out for the Philly Fed data that we have in 51 minutes. Keep that Squawk service open that you get from Live Squawk. Watching out for any news on Iran, Israel, any developments there, any developments on tariffs and trade as well, because they're probably going to be the main driving force, and probably looking for a slightly further rebound going into today. I'm going to wish you all a great, don't forget to be trading the September contract on the ES and the NQ. I'm going to wish you all a great trading day. I'm going to wish you all a great weekend as well. And until Monday, I'm going to say take care, stay safe.